Good afternoon, everyone. I am going to do this live, unedited interest rate review here for today, the 31st. All right, let's jump right into it. We're on the United Real Estate Capital website. This is the address up here, urecapital.com, and we are in the interest rates page. Come on down here, and this is the market data right here, 10-year Treasury, two samples of mortgage-backed securities, and the Freddie Mac primary mortgage market survey 30-year fixed rate. Coming on down to the interest rates here as of 11:24 a.m. Let's go ahead and jump right into the historical rate data. We're going to compare today to yesterday. All right, what we are sitting at here is, let's see. So had a some significant movement in some of the rates here. Let's go down, look at the lowest rate, the middle rate, and the highest one, 5.125 with an APR of 4.75. Estimated cost coming in at 11,513. This includes everything: points, any lender slash broker fees, appraisal, title, escrow. This estimate includes everything, as you probably see on the previous page. We have a list of it. So 11,513 yesterday. Look down here. The APR was 5.505. That dropped down to 5.475. That drop in the APR is reflected in the closing fees here. 12,455 yesterday, down to this 11,513. All right. So how about we go on the high end, and then we'll end up in the middle of the pack. How about that? So on the high end, 7.375 with an APR of 7.375. If you remember from any previous videos, when the rate and APR are the same, that indicates no fees in there. And you can see that reflected in the closing cost here. It is showing zero cost and a credit of $3,094. Remember, a short-term rate like this can be used for investors looking to flip, or somebody who's, say, going to be moving in 5 years, 5 months, and they just need some cash to get the house fixed up for sale. Yesterday, 7.375 APR, reflected in the closing cost of no cost and a credit of 1903. So look at that. The credit jumped up significantly from 1,903 to a credit of now $3,094. And let's go ahead and finish up with the rate in the middle. 5.875. In fact, this was a very popular one yesterday. There were a lot of lenders advertising this one yesterday. 5.875 with a 6.025 APR. Let's scroll up, compare that today to today. 5.875, the APR dropped from 6.025 to 6.002, and that could be reflected with a slight drop in the closing fees from 4,790 down to $4,082. So overall, pretty good drops today. If you were in process getting ready to close pretty soon and you didn't have your interest rate locked, this would be maybe a good day to lock your interest rate in, because you can see this drop we're going to probably lose this drop maybe tomorrow or the day after. I don't know for sure, but my guess is when you see a drop like this, sometimes it doesn't stay around too long, depending on what the rest of the market situation is. All right, so those are the interest rates. You can take a look at the rest of them on the website at your leisure. Please visit, enjoy. Let's close up by talking about a little bit of purchase here. So I've been mentioning since last year. In fact, I did a video, I think it was 9 months ago or so, about getting ready to purchase. I mentioned that housing prices were going to drop down, and you need to be ready for that, and not be scared because it wasn't an indication of some type of housing collapse. In fact, I mentioned this. Maybe I'll look for the video. No, I'm doing this unedited, so I should have looked for thought about that. I would have showed the video earlier when I mentioned that you're gonna start seeing YouTube videos with houses on fire, and the creators claiming that this is the next housing collapse. It's beginning, Armageddon, that type of thing. And I mentioned in my video, just chill, relax. This is a normal cyclical occurrence of the housing market. This is not another 2008 and 9, resulting in a collapse, the huge collapse that we experienced in 2011. And of course, I know some of the creators of those videos would disagree with me, but I looked at their material, and pretty much if there wasn't a 2008 and 9, they kind of wouldn't have a leg to stand on. I've seen them try to connect the dots with some loosely related data, but it's just not enough. They just kind of keep leaning on the whole 2008 and 9 thing. In case you weren't in the loop or didn't have time to follow the 2008 and 9, that was completely engineered. That's the way I refer to it as. That was a result of fraud, greed, mismanagement, lack of leadership, and in certain areas, lack of regulation. And it happened at all types of levels, and almost everybody was involved. We had, investment banks involved in it, the ratings agencies involved in it, massive insurance companies involved in it, wholesale lenders, retail banks. Yes, you too, retail banks. We had retail mortgage brokerages, real estate brokerages, title companies, escrow companies, appraisal companies, and let's not forget consumers. Oh yes, homeowners and would-be homeowners were in on the scam. So everybody contributed. That was all types of craziness at all different levels. Since then, laws, policies, procedures, licensing and background requirements, all these type of safety measures were put in place. So we might see something else, but we're not going to see another 2008 and 9 again. So that's not happening right now. This normal with housing units going down, housing permits going down, median sold prices going down, all those typical indicators you see, normal. And so who am I to tell you this? I'm just some no-name person, some nobody on YouTube. And that's the exact reason why you should listen to the advice. Because if I were some big time YouTuber or some famous person on TV, everybody would know, and there'd be no opportunity for profit. I hate to present it like this, but it's true that there are going to be huge opportunities. There's always a huge opportunity when there's some type of downturn, and even though this is not an actual housing downturn, the fact that it's perceived by a lot of people is going to be enough for you to find some deals. So what's happened is we've already had the natural cyclical occurrence, a natural drop. Make it a tiny bit more drop, but this market out here is really resilient. So we've already had our 20, 30, 40, 60, 90, $100,000 drops. So any other drops that are going to occur are going to be from the discounts that you negotiate with the seller. Sellers that weren't so willing to negotiate are going to be open, not all of them, but you're going to find them, are going to be willing to negotiate now. And so this home that naturally dropped in price, you might be able to get it for another chunk down. And so you're only going to be able to do that while there's fear in the water. So while everybody's kind of treading around scared, you're going to be the shark swimming on through, looking for the deals, looking for the meal, and you're going to eventually find it if you keep looking. Problem is, there's not going to be a whole lot of time, because people are going to figure out in a reasonable amount of time, fairly quickly, in my opinion, that there is no big collapse, and things are going to start going up again. So you got this opportunity during this perceived impending housing scare. You've got this opportunity to snag those deals. So if you don't have a real estate agent, you're just getting started, you don't have a real estate agent, I recommend getting a good agent right now. And I hope I don't piss some of the young hotshots off, agents off out there, but you need an experienced agent. Now, there might be some top gun out there who only has been doing it for a couple years or so, that just hustles so hard and works so hard. they can might maybe make up for not having the experience, but it's really hard to beat the experience of those hard hitting seasoned agents who've been out there doing it day in and day out, for a very long time. It's just hard to beat that kind of experience, and that's what you need to get these deals, to navigate these waters, and get those deals that are going to be out there before they're gone. So my recommendation would be get your agent now and go out there and start swimming in the waters, looking for those deals before everybody figures out there's going to be no horrible housing crisis. Sorry to laugh at it, but I just picture in my head there's so many these financial people in finance related jobs or give out this financial advice, and they're just waiting to be the next person, that called the big collapse going on. What's the guy's name? Gentleman, was Michael Burry. Oh my goodness, I'm forgetting his name. Michael Burry is this. They're just waiting to be the next one of those. But they kind of missed their time back in 2006. Maybe they'll have an opportunity. My advice would be, if you're looking to be the guy or gal that calls the great collapse next one coming up, just keep saying it, and it's eventually going to happen. You could be the one that called the housing collapse of 2052. So, uh, anyway, I'm gonna get back to work. Gosh, I really shouldn't put this unedited video up there, but I'm gonna get back to work. Y'all take it easy, please. If you have any questions or comments, drop them in the comment section, or you can go to the contacts here and call the 800-298-8474 number if you're, title companies, other folks, and everything. If you need to get a hold of us, this number right here, the 949 number, please call. And if you customer inquiries have any questions out there and you don't want to put it in the comment section, go ahead and fill out the form here, send it in. Promise you will not get spammed. The email is only used to reply to your request, and that's it. We don't put you on some type of spam list and keep sending you a bunch of crap. All right, so y'all take it easy out there. Have a great rest of your day. Again, please let me know if you have any questions. And I'm going to get back to work here. Let's see. Hold up. Oh, you guys are still here? Yeah, there's a lot of work to do behind the scenes, I tell you. Anyway, I'll see y'all later.